Welcome to another episode of Investor's Guide to Hard Money Lending, here put on by CoreLend Financial. Today we have our fearless leader here with us, Douglas Skipworth, the founder of it all. So Douglas, welcome.
Welcome, thank you. I'm glad to be here.
Okay, yeah, I'm glad you're here. No, you've seen him a lot of times on the Investor's Guide to Real Estate in Memphis on that podcast with Dean Harris.
Yeah.
So filming another one today for us.
Yeah, so excited.
Okay, so you tell me, I know a lot of our viewers and people are interested in how do you get started in investing? And how did you start all of this?
Oh, how did I start?
How did you start?
Oh,
Yes.
Gotcha. The short answer is, I got into real estate investing to lay a foundation from which to build like long-lasting people-serving businesses, and which just ironically ended up being real estate related. The longer answer probably goes back to when I was like a little kid. In third, like 1983, when I was playing basketball and our third grade team won a championship for the Y. And I was like, it's as hokey as it sounds. Like I fell in love with like doing meaningful work with teams. And so I was like, oh, team sports, like this is my dream. And so I thought I was gonna end up with like an NBA career like John Stockton. and about by high school, I was like a little short.
You stopped growing.
I stopped growing. So then I was like, in college, I was like, I'll study organizational leadership and maybe I'll do something with the church because there's nothing more meaningful than, doing God's work with God's people. But before I could really, felt the call for that, I saw the light of business. So I fell in love with a Memphis girl and ended up needing to get a real job. And so I got in the business world and was like, wow, this is the ultimate way to do a team sport where you can actually like work with people and work for people. And I was like, this is what I want to do. And so it was a little bit of a stop and start with some finance and accounting work, but I got in banking and I've been in 96. And so I've been a lender and a borrower ever since. And specifically, I got into real estate because as I was doing that, I was like, oh, you can buy a rental house. At the time, this was 20 years ago, you could buy a rental house, put a renter in it, and have the renter pay the mortgage. So you could essentially be in it for little to no money down, and that would allow you to build something, build a base of cash flow, of assets, and then maybe a business opportunity would present itself. And
obviously it has.
And the two interesting things, one is that it kind of was real estate that happened, but also with the cash flow aspect and the rental houses themselves being a business outside of a service business. Like it is not a hobby. It is not a passive set it and forget it. Like rental housing is a business.
It's very involved.
It's very involved. And so I learned that this is a business. So there's not like you don't have to dream of having a business. It is a business. And then that's where like some service came from it. I guess the last point I would make from that is just that when you got the rental houses as a business, and then you've got the service business or any other type of business, you're in working them together, looking for the synergies that came from it is kind of how I got into it. And I guess here's where I was going. I was like, where was I going with that? Where I was going with that is everybody gets into real estate investing for a reason.
Yes.
And so it could be cash flow, it could be retirement, it could be wealth building, it could be to create opportunities. So there's a purpose. It's not to own a rental house. It's
to be a landlord. No,
be a landlord. Thank you. Like you don't get in it to be a landlord. You get in it for something. I got in it because I wanted to have an opportunity to use it for a business purposes to kind of get to where we are. I have other people who've been in my life who they want to retire at a certain age by having rental properties, or they want to sell their properties and do this. But it's like, no, this was a foundation from which to go from.
That makes sense, and that kind of goes into CoreLend of you founded that for the purposes of helping other people to be able to create those wealth in more creative financing ways.
Yes.
So now tell me, like, how have you used hard money lending to help build your platform, build your business?
Yeah, thanks. I guess I'd say the two things is one, yes, I'm going to give you the longer answer, like, because when we were buying rental houses and we were able to like, oh, we can have friends and family. If we help them buy and manage their property, then we can generate some fee income to provide better service to them and for our own properties. And so that led to CrestCore Property Management, CrestCore Realty, and ended up doing city-like maintenance services to provide for that. Along the way, clients needed more. And so City-Light was... We always have joked about that we were using Chuck in a truck, then 2 trucks in a truck, then it became a cluster truck because it would manage independent contractors. It's tough. So we got the City Light to help manage the maintenance so you could have them come in when you needed. Well, everything has come from a need of clients driving the client need, driving the business. So when we were doing management, investors there were some who were credit challenged and they needed financing. They were internationals, so they couldn't buy property in Memphis with financing, or maybe they had a medical bankruptcy, or maybe they had a divorce and they just couldn't get traditional financing. So we would borrow and lend to them and capture a spread, but everybody was winning. Then it came to Richie Ward, was doing a short-term flip, and so we worked with Richie and then started doing some short-term financing that kind of birthed out of that. And so then we got into the short-term. CoreLend got into short-term financing. So I've used CoreLend for short-term financing.
Yes.
A really cool way, I've used it for long-term financing. So I've used it for both types of financing. The short-term financing, which has been awesome, which I don't know if the listeners know this or some of your borrowers know this, is like, if by chance you can buy, if you have the means to buy a property, you can borrow the hard money for the rehab.
Yes.
And so if you have some other way to purchase the property, say you own it free and clear, say you have another line of credit, you can then use CoreLend for the short-term borrowing. So you don't have to borrow as much, so it's not costing as much. But then CoreLend will oversee the rehab with some preferred contractors. So CoreLend's preferred contractors can do the work. CoreLend's team can manage the draw process. You can work together with a realtor to see the rehab take shape the way it needs to take shape. So for me, that's been great way to use CoreLend.
And it's been a great way, say, even with, say, CrestCore Property Management clients, if they own a property free and clear and a tenant has just unfortunately has destroyed the property, then they own it free and clear. Hey, here's an option where we can go in and you can do this rehab. Right now, if you don't have the $50,000 to be able to do that, and then you can refinance that out, and you've got your property up and running versus it's just sitting there forever, not being able to be rented, and then being just a drain on you.
Yeah, I mean, that's a great way to borrow for a rehab. Again, if you own a free and clear property, that's a great way up. We've done it on a short-term basis. On a long-term basis, we've just borrowed for CoreLend for a 515. 5-year maturity on a 20-year amortization for a house that it just made sense at the time. And then also occasionally, rarely, hardly ever, CoreLend has to take a property back. And in that case that they do, they usually sell that. It's REO, property, real estate owned by the bank, or by, in this case, CoreLend. And they will sell that property. And so I've had a chance or time or two to buy a rental from CoreLend with some financing from CoreLend. So that's been great. So I've used CoreLend in 2 long-term ways and 1 short-term way. It's been great.
And that's a great way, like in the long term, I tell people it's not always the best option, but in some scenarios, it's an excellent option because it allows you to where you never had to bring that 20-25% down payment because you got a good enough deal. Your equity in it is your good negotiation skills.
Yes. Yeah, exactly. Or again, in the case of the short term, where CoreLend, with the system and teams they have in place, where they can do a lot of the rehab and supervision, which for me in the stage I was in a particular time, it just made sense. It was like a great way for to piggyback or capitalize on what CoreLend's doing, to leverage that skill set that y'all have.
And it is, and you talk about being credit challenged. We don't have minimum credit scores on doing these, but it's a great way for somebody to potentially improve their credit because they go and do a flip and make 20, 30, 40,000. They pay off these credit card debts
That's
and then
awesome.
and then they can go into more traditional financing. So it's a way for them to improve their status as well. That hasn't been your issue, but it's like you can pick up properties that wouldn't normally be financed by a regular lender either and get them to the point like the rehab and get them where they can be refinanced with a regular lender. So there's many ways of getting creative to make you win in real estate.
Oh, yeah.
So what would you say with like where you see your biggest piece of advice when using hard money? What would you tell somebody to look for in a deal?
For I guess any deal or hard money specifically, timing is very important. And what I mean by timing is like how long you are going to be borrowing the money, because it is convenient and you pay for the convenience. And so you want to get in and get out of the hard money as quick as you can. So I would say you would want a plan A that's going to get you in and out of your hard money loan quickly. You'd want a plan B that's going to get you in and out of your hard money loan a little less quickly, and then maybe a plan C that's going to get you out in like kind of a worst case. So I would say you got to have a couple of 2 or 3 plans of
Exit strategies.
Exit strategies or contingency plans of like, okay, how am I going to get this loan paid off? Because this is going to get really cost prohibitive over the long term. This is a short term loan. This is a tool, and I've experienced that. You as we have like a doing a flip. I think a lot of us have had flip experiences where you buy a house and you finance it and you do a great rehab and you go to sell it
And it's not selling.
and it's sitting on the market, and you're just like, okay, I can do this for 30 days. All right, 30 days turns into 60 to 90, and you're like, oh my goodness, either I'm paying the loan, a hard money loan, or even a traditional loan, or even if you just got your own cash tied up in a deal, it's like you're not making any money. So being able to pivot quickly is crucial for a hard money loan.
And we're in a market like that right now where everything looks like it should work beautifully on paper, and then it doesn't. And so that's why you want to have those strategies where, okay, what can I do in this? You want to think worst case scenario, am I still going to win?
Yes. Yeah, so that's my number one piece of advice. Number 2, I guess, for a hard money loan when you're coming in, and I know we're going to talk a little bit about this later, but it's having your ducks in a row. When you present the loan opportunity to CoreLend, I would say, know what you're doing, know your ARV, know your comps, support it, know your rental comps, support it, know your rehab, support it, know who your contractor is, know if you're going to list it, who your agent is, and then if you're going to borrow, be able to have all of your whatever necessary paperwork there is, but just have a good plan and strategy in place to share with your loan officer.
And that's what I tell people, say for an example of a new construction loan. They're like, well, you finance the lot. I'm like, yes, we can do that, but it's probably better for you if you don't finance the lot, you go ahead and buy it, get all your permits and everything pulled to make sure you can build on it, because the last thing you want to do is getting to this new construction loan, and then you've got 3 months of making interest payments, and you're not able to start construction yet because you haven't been approved by the city. So it's like you say, get your ducks in a row.
Yeah, and I think that goes back to the first point about like you want to get in and out of something, a hard money loan quickly. Like that's the whole point of a hard money loan. It's convenient, it's quick. How can I get this? Because a traditional bank is going to take a lot longer. Get in, get out, and then move on to another lender, either sale or another longer term lender.
I would agree with that 100%. Yeah, it works in ways where conventional financing just isn't an option.
Yeah, it's a great tool. but it's not the only tool, and it's not the tool that you want to use. Like a knife, you see this occasionally, right? Like a knife is an awesome tool, but it's not the best tool to pick your teeth with.
And you're not going to eat soup with it.
You're not going to eat soup with it, but you can use it for a lot of really good things. So use a hard money loan for what a hard money loan is.
And that's what, yeah, and as you've mentioned a couple other things with hard money, like transactional. You haven't used that. That's a piece of the hard money that I've used.
That is awesome.
And it's a great term where people don't realize that a lot of them you have to do a double close, meaning you have to close on the same day when we allow you up to 60 days. I used it in one piece where we bought it, had a CoreLend fund the entire project, and then got it refinanced out and cashed out.
Yes.
And still cash flowing. So
no, I think that's a great tool. I just hadn't had the opportunity to do that, but absolutely, if the opportunity presents itself, wouldn't think twice about it. Especially now that you got a new software that makes everything so much easier to apply and.
I can't wait for you to try the new software.
Yeah,
we just haven't had one yet, but
I'm excited.
We got our first I talked to a Birmingham broker, and he said whoever did that, whoever changed that, had the idea to change that loan software, like tell them it works fantastic.
Well, congrats. Yeah, I think that's kudos to you, kudos to Richie, whoever was the one that did that. Awesome.
Because it's so many borrowers that want to do hard money. A lot of times they're new to real estate too, that use hard money because they don't have that established. And so we wanted to make sure it's easy on our borrowers to be able to fill out the documents or to upload documents into their portal. And so it's trying to make it a smooth process for people sometimes that are new that we can guide them through, and it's an easy and a happy process for them.
Yeah.
So you tell me what's a story. What's a worst case scenario, a bad scenario you've been through? A horror story.
A horror story?
Yeah.
It's like the horror story du jour, like the horror story of the day.
Yes.
Unfortunately, because I've been doing this for a couple of decades, and as a property manager, we've seen it all. So, meth houses, people dying, foreclosures, evictions, you name it, you've seen it. So I'll give you like a most recent horror story is I had a house that went vacant, and it had some deferred maintenance, so it needed a significant rehab. I think like $40,000. And so I was like, okay, that's significant. That's not like just write a check and do that today. So I was like, hey, we got to space this out timing wise with the cash flow of the properties. And so during that time, there were, between the time it went vacant to the time we started the rehab, there were some unhoused people who were using that, and we trying to keep them out, during this phase of trying to keep them out, trying to get boarded up, whatever, as we're working towards the funds to get it. And unfortunately, they burned the house down.
Oh, no.
Yes. So the homeless people in Memphis burned one of my houses down.
And that is not an uncommon story, though, for Memphis.
It is. That is a horror story for me. That had never happened. But what was crazy is 6 months later, it happened again with a duplex.
Oh, that is terrible.
It was terrible. It was terrible.
So how'd you get out of that situation?
Well, what I was going to say, really, the lesson, the silver lining, and the lesson is to have proper insurance. I know it's tempting to skimp on insurance because that monthly cost feels like it's draining your cash flow. But life happens, man, and you never know when. And thankfully, both of those properties were well insured. And so the loss was made up, well more than probably the market value, maybe a little bit higher than the market value on both of those homes in a top-notch condition, which neither of them were in a top-notch condition at the time of the move-out. So that the insurance proceeds, were very generous, which was great because we were well insured. So what was a horror story, and is a horror story, one of them literally had to be torn down. And so it's a vacant lot. The other one is in process.
In process. And you say that with insurance, it is so important. Some people are like, I don't need this. It's not going to be for that long, even like in the hard money space. So we had one of our borrowers, a tree fell in, it had gotten broken into, and then repaired on that. And then a tree fell on it. It is a total loss for the house. Well, not only did she end up paying us off at CoreLend, she walked out with over $10,000. It was a big check.
Yeah, excess proceeds. If you're funding or if you're insuring it properly, if you're insuring it kind of according to the standards of the insurance company, it's probably going to be at or above market value. So in a worst case scenario, you might have some proceeds, some additional proceeds or excess proceeds. So that has been good. I guess a caveat on that, and kind of like a horror story that I hadn't thought about, and I hadn't thought about this as a nice CoreLend, but one of those houses that I guess both of those are on a loan that I have that has a prepayment penalty. Mm-hmm. And because the prepayment penalty is very onerous, I'm in a position where I got to kind of wait out the prepayment penalty term before I can sell a property. And so CoreLend doesn't have prepayment penalties.
No, there's no prepayment penalty. So our thing is going back to what you said in the beginning, get in and get out quickly. Yes. You want to get in and get out. If you pay it off that 6-month loan in 3 months, great for you. That's more money in your pocket. That's more profit in your pocket. It is the speed. So get in and get out.
Yeah, and a learning lesson for me, I've been doing this for 2 decades, and I will never do a loan and ignore the prepayment penalty. That is something I will negotiate from now on, a prepayment penalty. Because it has been, it's just been something that's been constrictive and, constraining, and it's hindered things that I was able to do because there's a prepayment penalty on the loan. So anyway, that's my life lesson, like advice, to expert advice there is, negotiate your prepayment penalties. Know what you're getting into. But what's so great about CoreLend is you don't have prepayment penalties.
You don't have it.
So you don't have to worry about that. This is more of a long-term loan.
Now, you go into a good point, though, because there are a lot of times with these DSCR, some of these, there are prepayment penalties. Like you said, they could be pretty daunting. Yes. And so what is your strategy going to be to negotiate that prepayment penalty?
To understand what it is, to see if it's a sticking point or if there is room for negotiation on that, on the length of the term or the calculation of the prepayment penalty.
Because a lot of times it's before 5 years. I mean, you're locked into for at least 5 years.
Correct. And this is a scenario on a 10-year loan where I was locked in for 9.5 years.
Oh, wow. Almost the entire length of the loan. Yes. You couldn't pay off the loan early, period.
So, thankfully, I'm 3 years out. So, it's not, I've made it through the hard part, but it's still, I didn't realize that until I needed to pay it off. And I was like, wait, I can't, this is not, I don't like this. And so I'm going to negotiate the length of that term. I'm going to negotiate the terms. Because if it's a payoff, maybe it's not a bad payoff. This is the calculation. It's just like, oh, this calculation is terrible. I don't like the spread, the way they calculate it. So I'd negotiate the term and the rate or the pricing of it.
Yeah, always read the fine print.
Maybe I pay a little bit more in interest on the front end. Maybe I pay more points. It's something. I mean, it's all a trade-off. So
it's a trade. Most people don't realize that you can negotiate these things sometimes.
Yes, and so I would negotiate that. I mean, it's just something that some things for me were non-negotiable. Other things are totally negotiable. And in the sense going forward, like a prepayment penalty, maybe I'll have it, but I would just negotiate it.
I gotcha.
Yeah.
Well, it's been a pleasure having you on here. What questions do you have for me?
Well, Alyssa, I've always been wondering, what gets you excited for a loan to come to you? Like when you see this loan as a listener to this podcast and they fill out an application or they bring a deal to you, what do you go, this is a warm bath. This is so easy. This is going to have no trouble getting done. What is that for you?
I'll say this was a recent one that came to our coffee morning meetup.
Okay.
Brand new investor. Listened to the podcast. She started doing that. Filled out the app. Listened to what she should be on structuring a deal of how to get it. And she came to us with such a good property with such a high ARV and so much room in it. We were able to. She's pretty much having to make a payment of like $400 a month for the entire length of the loan. versus the normal, because we had the opportunity to roll in interest payments, the origination fee, all of this, because she found such a good deal, because she listened. So in a sense of the purpose of, like, where you say you want to help people, I do love to see people win. Like, I want to win myself, but I want to see others win too. And so that's kind of what, when I see these new people and they pick the right properties, they follow the advice, and then they do have that success and win in real estate, so then they can go do it again. That means I've done my job well.
Yay. Good. And only a follow-up question is, I've just wondered this, I had thought about this for you. How would you do this job as the loan manager if you weren't an investor / and or agent yourself? Like, how would you be doing this?
I think it'd be really hard. I think it's a little more authentic that I am an investor myself. I've been with an investment brokerage for almost 7 years now.
Yep.
And I know Memphis. I'm a local. And
there you go.
And you can apply those. Just know your own city, know your own market, because a lot of these things apply to every market out there. But know your city, and that way you can find the deals and make the connections with people too. And I think it's very hard if you're coming in from a completely different industry to give that advice with authority because you haven't had the experience before. My first flip was my first 2 years in real estate with Keller Williams. I never thought of buying properties myself. And then coming over here, it's looking and seeing, hey, I'm helping create wealth for all these other people. Why not try to do that for us? And then I think one of the funniest things, when CoreLend was still fairly new, and I go up to Dean Harris, and I'm like, Dean, this property, they only want this amount for the 17-unit apartment complex. And Dean's like, well, let's buy it. So Dean, myself, and my husband all went in together and flipped a 17-unit apartment complex using CoreLend.
Yeah, I remember.
And it was already 50% occupied, so the tenants were paying our interest payment.
Yeah.
So, and we won there. So that's that's a scary leap for a lot of people to start with on the first one. That would not be my recommendation.
Right. That's not what you're saying.
But it is exciting. You can see those deals, and I think you can really springboard some things that you want to accomplish personally through real estate too, that you can't always do if you're just going to the same job day after day. Where in corporate America can you go and, like, hey, in 5 months, I made a $50,000 profit on this one little property I flipped. And then you can parlay that into more and more. And then you've gotten true wealth there, or which you can accomplish other goals.
Yeah.
So, I enjoy helping people win like that.
Yeah, I see that. And I mean, I guess that's a little shameless plug for you in CoreLend, is that you're as a listener, like, you want to take advantage of Alyssa's expertise, both as an investor, as a realtor, as a lender. Like, you've seen it and done it, and you've got real advice and experience that people can benefit from. I benefit from that. You've helped me flip houses and list houses and do things for my family, and so I'm always taking advantage of your insight and expertise. So it's like, man, that's so invaluable. And to think about other lenders who might not have loan managers, loan officers who've ever done a deal. So I was like, it just seems like that would be so. I can't imagine how you would do it if you hadn't done what you've done.
It'd just be a big learning curve, I think, on doing it. With having that investor experience, and a lot of times people they're afraid to tiptoe in the water. I know the first property that we bought, I think Riley and I bought for like $18,000.
Yeah.
And okay, it served us well, but it was kind of scary buying that first piece of real estate that wasn't our own. But then it's like, all right, I did it once, it wasn't that bad, so let's keep doing it. So it's actually just taking the initiative to start, to take that plunge and to do it. And that's what we're here to help do. And you can take these, and like I tell new borrowers now, and it's always based on a previous experience of where I'm like, okay, I'm going to explain this a little different. With CoreLend, we look at it as, if you're going to have to bring money for the purchase price, and this can be taken nationwide of how you do it, towards the purchase price on this loan, we think you're paying too much for the property. Because our goal is, we want you to be able to get 100% purchase price and rehab covered. And so in doing so, that means that gives you an opportunity to renegotiate. You gave you an approval for this amount. Well, you were having to bring $20,000 for the purchase price to closing. Well, maybe you go back and try to negotiate that down with the seller. And then you're really going to cash flow a lot better when you refinance that out, or when you flip it. It's that much more profit in your pocket. So I aim to try to get every single person 100% financing. And if we say no, just go back to the negotiating table. The worst somebody can ever do is say no, or is it a lot better to lose your $2,000, $3,000 earnest money versus now when you go to refinance this property, you're having to bring that 20 grand to the table. So it's know all those things on the front end versus them coming back to bite you later.
Yes. That's good advice. And I know wholesalers, they bake in the ARV minus the rehab and still get you at a 7% ARV.
Yes.
When they're selling deals. So it's like you can get that deal.
You can get it. You can find
get
it.
The purchase price that at the entry level you need with the rehab to still be at an ARV of 70-75%.
And you've also got to look at not everything's going to be a home run, but you can look at solid base hits and you still get runs on the board.
Yeah.
So you just got to look at those. Where does it fit in long term with your plans on all these on financing? So, anything else for me?
No, those are my two.
Okay. All right. Well, thank y'all for tuning in, and we will see you next time.